Welcome to our webinar, How to Resolve Your IRS Tax Debt. My name is Fulton Abraham Sanchez. I am a CPA. Our firm, FAS CPA and Consultants, is very interested in helping you to resolve your IRS debt problems. This seminar is about installment agreements. We will cover two types of forms depending on the amount of the debt. If you owe less than $25,000, there is one specific form, 9465. If you owe over $25,000 but less than $50,000, there is another form, 9465 FS, that you need to fill in. We have to remember that every time we receive a letter from the IRS, or there is a letter in the IRS from the IRS in the mail, it happens because there is a discrepancy between the amount that we report in our tax return and the numbers that the IRS, the forms that the IRS have in their records. So there is a series of letters that the IRS will send to taxpayers, telling them or advising them that there is a discrepancy between the amount of income reported on their tax return and the amount of income and forms that the IRS has received in records from employers, contractors like from 1099, from employers from W-2s, from banks when there is interest, 1099 interest, or even dividends, 1099 dividends. When those forms that they are reported on your tax return are different from the numbers that the IRS has on records, there is a series of letters that the IRS will start sending to let you know that there is a discrepancy. Many times happens that you will not receive the first letter. We have seen that many times. Many times clients, they come to us and they just bring a letter like this, and not a CP 501, and there is no information on the letter. It just say you have an unpaid amount of money. This is the typical case where there is a discrepancy between the IRS records and the records reported from the taxpayer. But notice that this letter, there is no information. There is just there are pages from 1 to 6, but this letter will not bring the details what you owe and why the IRS is changing your tax liability, why they are saying you owe more money. We have created another seminar with specific information about IRS letters. You can check it in our webinar series, and that is about what to do when you receive these type of letters. We're not going to cover that, how you're going to request information from the IRS when you have this letter, because there is no information in this letter. We have a seminar that we recently did. It is about IRS forms. We go into detail what to do, how to call the IRS, what questions you have to ask, and what information you need to request. In this webinar, we are going to cover how to do the installment agreement once you have satisfied the need of the information for understanding that there is an additional amount of money. We suggest that you also talk to a tax professional. They should be an attorney, a CPA, certified public accountant, or an enrolled agent. Do not go with any other accountant who is not holding one of these qualifications or one of these licenses, because that person is not authorized before the IRS for acting before the IRS with IRS problems. So just deal with a qualified professional, an attorney, a CPA, or an enrolled agent, and they will be able to help you clearing this problem. So in this webinar, we will just gonna use this amount to do the installment agreement. We're going to the first installment agreement, because remember, the Form 9465, as we say before, is only when you owe less than $25,000. So in this letter, the taxpayer has received an information. This is for the year 2016. Form is CP501, and there is no clue about this debt. Once going through the process of getting the information from the IRS, requesting the first letter, as we said in the seminar IRS form, this is not the first letter. There is a letter, a previous letter, that the IRS will give you the details. So you have to call the IRS and ask for the information. So many times, or all the times, there is a number here that you can call the IRS. In the webinar that we produced before is IRS letters. We provided the detail of step by step what to do when you receive a letter from the IRS and how to request the information. This letter says that the IRS says that you owe $9,533. This means that you need to find information what is the reason why you owe this money. And once you find that and realize that this is correct, then the next step is to do an installment agreement. If the amount of the installment agreement is less than $9,000, less than $25,000, you can use Form 9465. This form will allow you to provide the information to the IRS and pay the amount up to 72 months. This is the virtue of an installment agreement. You just need to remember that if you pay, the longer you pay, the higher the interest rates that will be applicable to your debt. The more interest you pay, the longer you pay, the more interest you will also pay with your installment agreement. The Form 9465 has to come with the same information as on your tax return. So if we are going to use Form 501, this is from Form 1040. So we're gonna use that. The IRS is gonna tell you on the letter, Form 1040. So we're gonna use that to fill in the letter. So part number 1, this request is for line number, the first line. On the first line, we are gonna put 1040. This is the form. It is even written here, 1040. 1040 is the tax form that is used for individual tax return. This installment agreement is useful for individuals when they owe taxes to the IRS. For businesses, we will do a separate series for businesses. This particular seminar is designed for individuals when they owe money to the IRS and they have or they plan or they use the option of an installment agreement. Following the same letter, we know that this is for the 2016 year. So we're gonna do here 2016. Just follow the instructions. the name, we're gonna use a generic name here. Is, for example, we're gonna say John Smith. Remember that the information here should come same as your tax return. It cannot be different to match the information from the IRS. Address is same as your tax return. We're going to use a generic name, a street name here. And we're going to do this Miami, Florida 33133. This part 1 should be the same as your tax return. Cannot be different. Has to be the same. If you have changed the your address, your residential address, then you have to check 1B. But this is only if you check your residency address. Otherwise, it will be the same. Your phone number. And the best time to call, 6 p.m. This is your work number and the best time to call. But if you put number 3, your phone number, your home phone number, that will be enough. Enter the total amount shown on your tax return in line number 5 or notices. So we're gonna use the notice that we have received, 9,533.53. 9,533.53. This is the amount owed. That is for line 5. Line number 6 is if you owe any additional money. There is no any additional debt. So line number 7 will be the same amount. Line number 8. If you are going to do any payment with the form, with this form 9465, you enter that amount here. And that means that you have to apply, you have to put a check when you mail this form. Remember, this form is used when you owe less than $25,000. So this form is owed when you owe less than $25,000. If you owe more than that, there is another form that I will cover in a minute. It has a little more of information that you need to, that it will be requested. But here on line number 8, if you plan to do some payment, to make some payments, then you have to attach a check. We're gonna leave that in blank. Number 8, number 9, it will be the same that you owe, 9,533.53. Now here's that we have to do some calculations. We have to divide the amount of 9,533. We have to divide it into 53. That will be one thing. The reason that they request that information is to provide you the minimum amount of money that you can pay. Because as we said at the beginning of the webinar, the maximum number of months that you have to pay is 72 months. But remember, the longer the payment terms, the more interest you have to pay. So it will be advisable to pay this in 12 months. If you don't have, if you want more time, if you need additional months to pay this debt, perhaps 24. But the idea is to make it the minimum number of months possible, so you don't pay interest. Why? In our previous webinar, IRS forms, the interest that the IRS apply, we explained that the interest that the IRS applies to a particular debt is between 4 and 5%, depending on the federal interest rate, plus an additional interest that they have. So if the interest rate is low, and the IRS and you want to pay in a number of months, the IRS is going to apply an interest rate, and the bad news is that that interest rate is monthly. It's calculated in a monthly basis, and the IRS is going to tell you what is the interest rate. That is very important. Why you need to request the information, the original information from the IRS when you receive the letter. I'm going to show you here an example on a full letter that we cover in our webinar from IRS forms. This is form CP 2000. In these forms, the IRS is going to inform you the interest rate that they charge you. Just to give you an idea, the interest rate for that year, for 2016, is 4%. This is the interest rate that the IRS is charging on a monthly basis over balances that you owe. So, for example, in this $9,533 that is owed, the IRS is already considering interest charges of $54,000. This $54,000 with 48 cents is the application of the 4% interest rate to the amount of owe for 1 month. The next month, when you receive the next letter, this will be probably double. And then it will keep accumulating, probably a little more than 54, because remember, this 54.48 is for 1 month. It will be increased to the 9,533, and then over that balance will be calculated another 4%. So it's critical that you calculate and you pay, when you do your calculation, you pay in the least number of months, with the objective of reducing your tax liability for the interest increase. So we're going to divide 9,533.53 into 72. That will give us 132.41. 132 with 41 cents. This is the minimum amount of I'm sorry, line number 10. Line number 10 is divide line number 9 between 72. So here is 132 with 41 cents. This is the minimum amount of money that you can pay. Now, I know that 9,533 is a large amount, so maybe do it in 24. 9,533.53 divided into 24 is 397. So I'm gonna assume is 397 with 23 cents. This is this is the amount that you have selected if you are doing the tax return, or if you are doing the installment agreement. An installment agreement in this case, and the amount is 9,533. This will be the amount to be paid in 24 months. Now remember, this is only the net amount. There are no interests calculated or included here. So in addition to the 24 payments that you will do for $397, you will probably have to do another 2 or 3 or 4 payments, additional payments, to cover the interest added to the original debt. As I said before, there is a 4%, 5%. It all depends of the federal interest rate. So when there are low interest rates in the economy, the interest rate will be lower, in this case 4 or 5%. When the interest rate is higher, the IRS will increase the interest rate, and that will also increase the amount that you will pay for interest in your debt. That's why it's very important that you make your installment agreement to the lower number of payments possible that you have. So 397. So in this case, enter the amount you can pay each month in number 11A. They even say here, make your payment as large as possible to limit interest and penalty charges, as these charges will continue to accrue until you pay in full. So this is why you need to pay the larger amount possible. This is for line 11A. Line 11B is if you are doing payments, if the amount of payments that you are doing in 11A, like the amount that you have selected, is lower than the number in line 10, then you need to at least pay the amount. There is no, the minimum amount that the IRS allows you to pay is the amount of the debt divided into 72. The amount of the debt divided into 72. In this case, we have chosen to pay the amount of the debt divided into 24. This gives us $397. Once you have done this information, if you are not able to pay at least the minimum amount that you have on line number 10, the IRS is going to give you the option to send another form, a statement, that is the collection information statement. There is a large statement where you have to provide all the information, or your current information, your bank information, your expenses, your credit card, your cars, your assets, your liabilities, your income, and your expenses. If you want to pay less than $132, you have to prove the IRS that your income and expenses are not enough to pay $132, and you have no assets, and your liabilities are, and you have to pay your liabilities, and you don't have assets that you can dispose of the asset to cover your debt. If you want to avoid that and sending this, this is a large statement. We will do a webinar to cover this when we do the offering compromise. Offering compromise is a option that taxpayers have when they cannot pay their debt. And form 433F is a large form, as we said before, that you have to put your assets, your bank accounts, your retirement accounts, your car, your house, your liabilities. If you have a payment for your car, if you have a payment for your house, like a mortgage, your credit card information, how much you pay for your credit card, your income, and your expense. All that has to be backed up with receipts, with bank statements, to prove that you have no income, your income is not enough, and you have no assets that you can cover your debt, and you can apply for offering compromise that will give you the ability to pay less. But that is only if you can prove the IRS that you have no assets and your income is not enough to pay this debt. If that is the case, you have no income, or you are in an economic calamity, and your assets are not enough to you cannot dispose of your assets to cover your debts, you have no money in the bank or not enough money in the bank, then I would suggest you can try with a installment agreement. But that there is a criteria that when we do the installment agreement we will cover. There is even a criteria, an online criteria that the IRS will give to taxpayer. It's a question and answer that you need to provide the information, the answers, and the IRS will tell you yes you can apply or yes you cannot apply. But that is when you are broke, when you are in an economic calamity. If that is your case, I will suggest don't do an installment agreement and apply for a offering compromise, because the IRS is going to request 6 months of bank statements, meaning that this has to be real. Otherwise, the IRS will not believe you and will reject the case, and you will lose the installment fee. So I know that many people say, and that's the one thing. Then second, don't do that do only an installment agreement. The offering compromise with an attorney, with a CPA, or with an enrolled agent. Do not do it with anybody else, because the IRS will not accept that application unless it's provided or it's done through one of these 3 professionals. I know that many people say, let's do it just because we need to try. Just try. Maybe we'll accept it. Only someone who is not familiar with offering compromise and with solving IRS debt problems will give you that kind of suggestions. A professional that is knowledgeable about solving problems with the IRS will never tell you, do this just in case. He or she will tell you, do this and you will receive an answer based on the experience, or don't do this because it will not work. Better to be clear from the beginning, because it's not good to give or to have false hopes. This false hope many times create the illusion that the IRS is going to magically make your debt, wipe your debt out, and when that will not be the case. So if you have the assets, if you have the money, you can sustain, you can pay a debt through a number of installments. Use this installment agreement and solve this problem from once for all. Don't believe in TV ads or advertising that will tell you that announces a magical solution for a tax problem about debt, because that is not the case. That doesn't exist. There is no magic solution for an IRS debt problem. The solution is an installment agreement when you have the resources, even though you don't have them. Accumulate them, you have it in a monthly basis because you receive your salary or income, then the IRS is going to allow your installment agreement without any request of information. If you pay more than what the IRS requires, without any kind of proof, backup information, the IRS is going to accept this installment agreement, providing that you comply with what you promised, paying $397 as we have stated here. Otherwise, if you are in a calamity, and you are broke, and you are in an economic calamity, you have lost your job, you are unemployed, you have no money, you have no assets, and you have high liabilities, then it will be better go through the questionnaire that the IRS provides online. And once you have that, all the answer clear, the IRS is going to tell you if you are qualified for the application. Just to give you an example, let's see here, offer in compromise online questionnaire. Is the offer in compromise pre-qualifier. This pre-qualifier is going to tell you if you are qualified for IRS offer in compromise. This is a lot of questions here that you have to answer, and this will probably take between 10 and 15 minutes. There is the status, the basic information, then there's your assets, your income, your expenses, and the proposal. There is a lot of information. You need your tax return, your bank statements, credit card statements, mortgage statements, auto finance statements, anything that is your the payment that you receive from your employer, your pay stubs from the payroll. Gather all that information and use this, but only use this if you are broke, if you are unemployed, or you have low income, such a low income that you are not able to afford an IRS payment like this. Do that only if this payment is not enough. If paying to the IRS will take the food out of your table. If you have the budget that you have is so compromised with food, with your necessities, and there is no money left to pay to the IRS, then go through this questionnaire. Is the pre-qualifier offering compromise, OIC, offering compromise pre-qualifier, and go over the questions, and at the end tell them how much you can pay. This is not the actual application. This is just the pre-qualifier. We'll cover this in detail when we do the seminar about the offering compromise. But I just want to tell you that if you are in an economic calamity and you cannot afford payments for the IRS, there is an option, there is a hope that you can use this pre-qualifier and propose to the IRS. And once you have this, even save it completely as you have it at the end, then use the offering compromise form, and you will have to fill in the information again. It's a large form with a lot of information. We'll cover that in detail, line by line, number by number, and proposal and the amount proposed for discharging of the debt. And once that is completed, then you will be able to discharge that debt. But remember, do this only if you are broke, if you're unemployed for many months, and or your income is compromised with your necessities, and there is no way, you cannot afford to pay that debt. But remember, if you have a debt of $9,533, it's not credible that you have no money, that you have no income to pay to the IRS. It will not be credible unless, as I said before, you have lost your job, you are in a calamity, an economic calamity, you are in the middle of a emergency like a medical situation that the IRS need to know, and you are so much in necessity, meaning you cannot afford to pay this, that you will be approved, and your application for offering compromise will be accepted. But don't do this unless it's real. Remember, you have to back up this with bank statements and with all the rest of the information, mortgage statements, auto finance statements, credit card statements, all that information, your budget, how much you make in a month, how much you spend in a month in groceries and all that. And the key there is that the IRS doesn't accept any kind of expenses for necessities for the budget. There is a criteria that the IRS has specified, and it will accept only that criteria. I think there is 400 times over the poverty line. There is a set of measures, a set of amounts that the IRS has created with the objective of accepting offering compromise, accepting amounts, and make those amounts standard, because depending on the amount of income and family size, there are different amounts of expenses for different sizes of families and for different sizes of income. But the IRS has normalized that, meaning has created an average, and that average is the one acceptable. So if you spend in a week, groceries for $250 or $300, the IRS is not going to accept that. You need to find out what is the minimum amount of the maximum amount that the IRS will accept for that line. There is one line for groceries, there is one line for rent, there is one line for each one of the expenses, for electricity, internet. There is one amount, an average amount that the IRS has created for each one of the categories in a budget, in a personal budget, which increases the bar for acceptance of the offering compromise. But remember, you only do offering compromise with a CPA, an attorney, and an enrolled agent when you are broke, when you are in economic calamity, or you are unemployed for many months, or or your income is so compromised that there is no way that you can afford to pay this amount of money, $397.23. In this particular example, I will cover that, as I said before, in the offering compromise webinar in detail, going form by form, line by line, as we are doing here, exception by exception, rule by rule, and what has worked with previous clients, and why there is a success rate when there is an application sent to the IRS and this application is fully backed up, and there is no question, there is no way that the IRS is not going to accept, because all the backup and all the information that the application request is attached to the application, and in addition to that, all the criteria that the IRS requires has been fulfilled. In this case, we want to stress the need for an installment agreement when you owe less than $25,000, and you can pay if you can afford to pay your debt through an installment agreement. In addition to that, for example, if you want to pay this for automatic debit or with automatic bank debits, the IRS will give you the option here to put your routing number and the account number. And this is where also is a little tricky. Many times with this form 9465 is mailed to the IRS in original. It will take probably 30 days, maybe 60 days. Sometimes I have seen 90 days. And the IRS has not processed the information. When that happens, we suggest to our clients to do payments through the IRS website. And that is irs.gov payments. This website, irs.gov/payments, will allow you to pay the amount that you set, as a payment, $397, online through the bank account. So here you will need to make a payment, and you need the information from your tax return. We will not go beyond this because this is official website, but you need to select the reason. For example, this is an installment agreement, you need to put installment agreement, and to pay 1040. They will also need your year, in this case is 2016. There are 5 steps. Well, these 3 amounts, all these 3 criteria: the reason of payment, the apply to payment, and the tax period. The next step will be to select the amount that you need to pay, and then also the account that you will be using for debiting this payment, because this is a direct pay. I will suggest not to do this unless you have an installment agreement. It's critical that if you have an IRS debt, you first create the installment agreement, and then you mail it, and then by that date, let's say that on line number 12, what day of the month. So I'm gonna say the 28th. So on the 28th of the month, I am going to go to online and irs.gov/payments. I am going to select the direct pay. I can also pay with credit card, same information, and I will use this for my first payment. This is for the first payment. If you don't see on the next payment an automatic debit when you have used your routing number and your account number, you need to go a second time by the 28th and do the payment manually till the installment agreement is accepted. The IRS will send you a letter, say the installment agreement is accepted, and you don't need to go online anymore. But this is only if you use the option for routing number and account number, and this is a automatic payment. If you do not want to pay this by routing number and account number, meaning that you want to do checks, then on the 28th of each month, you need to send a check. And on the check, you are going to write that the check is for the U.S. Treasury, the amount of the money, and you have to put the year and your social security number, or at least the name and the last 4 digits of your social security number if you don't want to put the whole number on the check. And later, or on the form, then this need to be signed and date. If this is a married filing jointly return, your spouse and the date need to be also signed. The cost. What is the cost of doing this? This is it. This is all what you need for an installment agreement. There is no more than the amount that you need to pay. Any more information. If part number 2, there is no need for that. You don't need to do page number 2, because that only applies if you owe more than 25. So page number 1, and you will send this to the address of the letter here, to the address of the letter with a copy of the letter. You will send it by certified mail. Once you have that covered, you have signed your installment agreement, attach a copy of the letter from the IRS, and send it to them. The installment agreement will be processed, and it will take between 30, 60, and sometimes 90 days. During that time, if you selected the option to automatic debit, remember, go to irs.gov/payments, and then select the payment either by credit card or by direct debit, and use these 3 things that you need. The reason for payment is installment agreement. Apply payment to 1040, the number of the form, and the tax year. In this case, is 2016. Then you will continue the information. If you do not plan to pay by month online with automatic debit, if you don't plan to pay, meaning that if you didn't use the routing number and account number on the form, right, and you plan to send a check, you can send a check. Or if you do not want to send a check, on the check you need to put a U.S. Treasury, the amount that you promise to pay, and last 4 digits of the social security number with the name on the check. If the check is from somebody else or from a company, you need to put your name on the bottom of the check in the memo line with the last 4 digits of the social security number. But if you don't want to send a check, you still can use the IRS.gov payments to do the payment online, even though you have selected to do payments by check. That way you save on check, you save on time, save stamps, and just do the payment directly. But remember, do this only if you have an installment agreement. You have to have an installment agreement to use the option of installment agreement. Otherwise, the IRS is going to send you a letter. These letters will keep coming until you provide a solution to this through an installment agreement, or as we said before, as an offer in compromise. So in this case, it's an installment agreement, either with an automatic debit or with a mailed payment, in two cases, for example, as I said before, if you select routing number and an account number, the IRS is not going to process this immediately. So you will need to do at least 2 or 3 payments online using irs.gov payments with the reason for payment, installment agreement, the number of the form return 1040, and the year. And if you do not want to use the routing number and the account number, then you can mail a check to the address of the letter that you receive from the IRS, or you go online and do the payment through the online option irs.gov/payments. This is for debts, IRS debts, less than $25,000. What happens when you owe over $25,000? When you owe over $25,000 but less than $50,000, you need to use Form 9465FS. The difference between the previous form 9465 and Form 9465FS is that in this form you need to fill in the second page. You have to. And you must do a bank debit for payments. You have to. It's an obligation. It's even a notice here. If your debt, if the amount on line 7 is greater than 25 but not more than 50, you must complete line 11 and part 2. Line 11 is automatic ACH debits, and part 2 is additional information that you have to complete. So in this case, we're going to use the same information from a previous letter CP501, but in this case, we're gonna do a $29 debt, so $29,000 debt. So same information about this form. At the beginning, this is 1040, and the year is 2016. This goes the same. We're gonna do here is John Smith, Social Security number, the street 123 Street, just a generic name. Miami, Florida 33133. This information matches your return. If you have moved, you have a different address, then you need to click. You need to put the new address, and then on line B, click that your address changed. In box number 3, your phone number. And best time to call 6 p.m. Remember that here you have to put the information in your bank address, generic address, the address of your bank, enter the amount total you owe as shown on your return, line number 7. We're gonna do the same form but adding at $20,000, $29,533, $29,533. 533 53. Enter the amount of any payment made in the return. Line number 8. This is if you are making any payment. We're going to leave that line blank. And line number 9, we're going to divide that by 36. Because it's a larger amount. 29,533.53 divided by 36. It's $820 with 38 cents. It's a large number. At this point, if you are unable to afford this amount, and you cannot provide this information, you cannot provide that money to the IRS, you have two options. The first one is to apply for an offer in compromise, as we said before, meaning that your budget, your income matches your expenses, and there is no amount left for anything else. Then you need to prove that to the IRS. And if you want to prove that to the IRS and apply for an offer in compromise, you need to fill in a large form with the proof that you don't have enough income to pay this. But the IRS will need proof and will send you letters and will request more information. That's why it's critical that if you are in that situation, if you are broke, you are unemployed, or you are in an economic calamity, and you have not enough income to pay this debt, you think in an offer in compromise. But before doing the offer in compromise, you go through the offer in compromise pre-qualifier. This is an online tool that the IRS gives to every taxpayer with the objective of in advance providing them the criteria for a successful offer in compromise application. This is the offer in compromise will reduce your debt. We have seen cases that taxpayers pay 10% of what they owe when they are large amounts. Well, we've seen that. We have a couple of testimonies in our YouTube channel that you can find more tips. What is their experience and how we help them to reduce their debt. In one specific case, there is a taxpayer with $479,000. Yes, as you hear it, $479,000. We help them. But remember, the reason is that those applications were successful is because we follow all the IRS steps required for applying and making a successful application. It doesn't work if a taxpayer applies just in case. That doesn't work. It's a waste of money and time and hope. Better just to go through the procedures, through the profile the IRS has created for giving you the at the end of this pre-qualified, the IRS will give you the answer if your proposal in taking in consideration your case, your condition, the IRS is going to make your proposal is going to be successful. The IRS is going to give you that at the end of this profile, even before you apply for one. So if at this point you are not able to pay, you have that option. Because you are in a calamity, you are broke, you are you are unemployed or you are in a tight income situation. The other option is that you do not do an offer in compromise because you do not comply with that. Let's say that you go through the pre-qualifier, to the offer in compromise pre-qualifier, and you do not, and at the end the proposal comes negative. The IRS is not going to accept your proposal. If that is the case, the second option will be to apply or to send a form, a 433 form F with the details to the IRS. Specifically, is this type of form is a collection information statement. This form is only for those who are not able to apply to an offer in compromise, because they, after going through the offer in compromise pre-qualifier, the proposal came as not enough. The IRS is not going to accept the proposal, and because you have your income is not enough to pay in 36 months, in 72 months, it's not enough to pay. You are required, or you are applying to the IRS for a lower amount. For example, if I want to do the minimum payment of in this case $29,533.53 divided into 72, that will be the maximum, is 410. So that is the minimum amount the IRS is going to accept. $410.19. If you are not able to pay that, but you still have income available to make some payment, and you are not able to pay $410, you need to use Form 433 and provide all the information on Form 433 to tell the IRS that you cannot pay that. And here in this line number 9, you are going to put the amount that you can pay. If it is lower than the division of line 7 into 72, and that is too much for you, you put the amount that you can pay, but as a consequence, you will need to come with Form 433. This is only if you are not able to pay the amount of the debt when it's over $25,000 divided into 72. And remember, the longer you pay, the higher the interest, the larger the interest that you have, that you will be applicable to your debt. So you can pay 410. You go with the routing number and account number, you sign, your date, if your spouse is also there, and the signature. If your spouse, it also needs to sign, you need to put the name of your spouse on the general information on the form, name and last name and social security number, same as your tax return. And then comes page number 2. Remember, this is only if you owe more than 25 but less than 50. Country of primary residence as US. Marital status, either single or married. When I make it single. Do your sales expenses? No. How many dependents you claim your tax return? Yourself. How many people in your household is certified? 0. How often are you paid? Once every 2 weeks. What is your net income per pay period? This comes from your pay stub from your payroll. So what is your net income per period? The take-home pay. I'm gonna say here 3,540. How often is your spouse paid? There is no spouse in this option. What is your spouse's income? How many vehicles do you own? Here you just put not applicable. Not applicable. How many vehicles do you own? How many car payments do you own each month? 1. Do you have an insurance? Then yes. Are your premium deducted from your paycheck? If your employer provides some health insurance, then yes. How much are monthly premiums? Then this is how much you pay from the insurance plan that you have with your employer. If you have no insurance from an employer and you pay by yourself, then you put no, and line 22C you put how much you pay. So I'm gonna put that this is yes. Skip question 22C and go to question 23. So if yes, you just go to 23A. Do you have court order payments? No. Are your court order payments deducted? You pay? No. How much you pay? Not applicable. And not applicable. Once you have all this covered, then don't forget to put the routing number and the account number, and still remember that if you do not see and the date, the 28th, line number 10, the 28th. On the 28th of the month, you do not see a payment, a automatic debit from your account because you have using your routing number and account number, then you need to go online and do the payments. In irs.gov, direct payments. And irs.gov payments, and once you select make a payment, remember to use the criteria. And select a reason, installment agreement, select type 1040, and select payment, the year that the letter says. In this case is 2016. Once you have that, you need to send this letter to the IRS, to the address of the IRS on the letter. Now, what happened when you owe more than $50,000? When you owe more than $50,000, you need to, it is advisable that you bring the balance of your debt up to $50,000 and then use the installment agreement. Or if you cannot pay your debt, you apply for an offer in compromise, remember. But you need to prove the IRS that you don't have the money to pay, and you need to prove that with papers, with bank statements and statements from mortgages, statements from auto finance, and credit card statements. And when you are doing the budget, you have to provide the minimum amounts that the IRS accepts. No more than that. There are some minimums, as I explained before, that the IRS will accept for your necessities, for the rent, for groceries, for internet, for utilities. There are some maximum amounts that the IRS will accept. So It's not your expenses, your real expenses that will be acceptable or accepted in your offering compromise, but the expenses of the IRS, the average the IRS has created. This is for when you owe less than 25, but no more than $50,000. If you owe more than $50,000, the best is to bring the balance up to 50 and then use an offering compromise. Or if at that point you owe more than $50,000, then apply for an offering compromise. If you qualify, if you are broke, if you are in a economic calamity, if you are unemployed, or your income is not enough to cover the debt, there's no way that you will be able to pay because your income is tied to your necessities and you have no assets. If you have a home, for example, if you own a home, you will not qualify because you have an asset. What the IRS will do is if you don't do an installment agreement, the IRS can set a lien on your property. Or the IRS, if you have cash in your bank, the IRS can kidnap your deposit, levy your bank accounts, or even garnish your salaries. So it is very important that when you receive a letter from the IRS, you take action. As we said before in our previous webinar, IRS forms, we have a detailed exposition of what to do when you receive a letter with the IRS and how to request the information and review and how to read the letters and review what are the reasons that you have this tax bill. About the cost for an application is when there is a long-term payment, meaning that you are going to pay over 12 months, 36 months, or 72 months. It is $149 setup fee, and this will be charged to your installment agreement. If the person is in a low income, meaning that it's making low income, depending on the family size, $25,000 a year, $36,000 a year, the setup fee is $43. This is if you pay by check or by the automatic option IRS.gov payments. If you have selected payment for automatic debit or automatic withdrawals, then the setup fee is $31, and for low income taxpayers is free, is waived. Those are the fees for the installment agreements. Now, remember that we said that if you are not able to pay, if you owe more than $25,000 and you are not able to pay the amount of on line 7, the amount that you owe divided into 72, in this case it's 410. If you're not able to pay 410, excuse me, you will need to use Form 433F. Form 433F is a form that will require that you provide your bank accounts, your investments. This is if you have 401k plans, retirement plans, or any other type of investment in the stock market. Also virtual currencies, if you have any position. If you have real estate, meaning that if you own your home, any other asset, cars, boats, or any recreational value, life insurance policies like whole life insurance, credit cards, this is your debt. if you have a business. This is if you have a business, and the employment information. Then comes what I was mentioned before, monthly necessary income. The IRS has created some standards, and based on that, you will need to provide those standards based on, for example, food, healthcare, housing, transportation. There is for each one of these items, there is a standard. For food, for example, for food, they're gonna tell you depending on the number of people in a family. For one person, 2 people, 3 people, and 4 people. For example, in food is 385, 715, 779, and 947. This is the maximum amount for one person for a month. So if you for example, if you are 2 people and you spend in a month more than $715 for groceries, you have to use this amount to fill in this form, to fill in the form 433. Why do I need form 433? This is when I owe the IRS money and I cannot do the minimum payment they are requiring. I need to provide this form. And for example here, to each one of these lines, I have to put the amount that I have, my amount, and the amount that the IRS has allowed. There is an amount the IRS has allowed. As I said before, you click here National Standards. National Standards here, next to here, National Standards. This National Standard will give you all the amounts that the IRS has allowed. Then I have to put my numbers. But the IRS is going to allow only their numbers for each one of these lines. This is for my personal care. This is for transportation, housing and utilities, medical, and any other expense. All this needs to be filled in with the IRS information, national standards. When I click national standard here on the page, national standard, this will take me to the IRS standards. National standards. This is collection of financial standards. In this, I have to go line by item by item type. This national standard for food and clothing, that will be for here. And then I have to go for transportation, transportation. Then housing and utilities, there is also housing and utilities here, housing and utilities. Medical, transportation, housing, medical here, this. So once I click on the national standard link, it will take me to the page, out of local standard. We review national standard for clothing. For example, for healthcare, it will take me to the page. For under 65, it's only 56. That's it. This is for out-of-pocket healthcare expenses. This goes for form 433. Then once I fill that information, then they will tell you the explanation of the form. But these two pages are critical because, first of all, the IRS, you have to prove the IRS that this information is real. And to every single line, for example, I'm gonna do this for same taxpayer, John Smith, address 123 Street, Miami, Florida 33133. Social Security number 222 22 22 22. Country of residence USA. County. I'm sorry. County. Miami-Dade. I think that. Okay, county. Let's see in the other forms. I think that it was here in this form. Which county? Yeah, this is on form 9465 FS. On the next, on page number 2, is actually county, not country. So I say Miami-Dade. Same thing as form 433. So it's county, not country. Sorry. Telephone number. Many people only have cell phones here. Oh, no, that could be the different social security number 333. Enter the number of people in household under 65 1 over 65 0. If you're a spouse and self-employed, no spouse here. Name of the business. No business. This taxpayer is an employee. Here's how it comes out of the accounts. For example, for the bank account, I'm gonna say this is Bank 1, account number 1234, type of account check, current balance value 2000. That's to give you an idea. This is not business account. Investments, if you have a 401k, you have to put the 401k. Account number, you have to check that on your statement. Type of account is retirement. Balance, this is how much you have. Let's say 5,200. Virtual currency, no virtual currency. If you have one, then you have. This is description is the description that you have in your tax statement from the county. Then the address, is your primary residency, your monthly payments, how much you pay. I'm gonna say 1,250. Year of purchase 25. Purchase price 150,000. Current value, I'm gonna say 250. Balance you own the property, I'm gonna say 120,000. Equity, that is the difference between 250 and 120. Now, the problem here is that if this is the case, you have an equity of $130,000. And this is what the IRS is going to say. You do have equity. You can go to the bank, apply for an equity line, and pay your debt. The IRS is going to say that immediately. Not immediately, but the IRS is when the case is assigned to a officer in the IRS, the officer is going to give you that suggestion. If you cannot pay your debt, you can go to the bank and request a line, an equity line, and pay your debt because you have equity line. And in an environment for low interest rate, it will be a good thing. It will be an option if you have the ability to pay. In this case, if you have a good credit, the bank will give you this. If you have a bad credit, the bank obviously will give you a line of credit, but it will be not a line of credit, a equity line of credit, but it will be very expensive because if you don't have a good credit. But this is one of the problems for homeowners when applying for an offering compromise, or applying for a reduction of the debt, or applying for a payment of the lower amount that they are supposed to pay, the amount of the debt divided into 72. Then this is one of the first things that the IRS will check. As of here, the IRS is not going to accept a lot. If you send this, or anyone sending this information, the IRS is not going to accept that you pay less than what is the minimum amount. Other asset, because you have equity, you have assets. Other asset is an auto. Monthly payment, I'm going to say 305. Year purchase 2015. Final payment, well, I'm going to say then 2018. Final payment, it will be 2023. Oh, final payment, sorry. Final payment month, it will be 08, year 2023. Current value, I'm gonna say 7,500. Balance owed for that car, 18 is I'm gonna say the balance owed is 12,000. And you have equity, you're at 0. If, for example, here you have equity 0. If, for example, here the current value of the car, just to give you, is $15,000, and the balance owed is 12,000, you have an equity of 3,000. This is the same case. The IRS will tell you go to the bank or go to the companies that finance cars, and get a loan over the value of the car, so you can do a payment towards your debt. In the example before, for example, 7,500, there is no equity. But this is the reason why these statements are critical, because the IRS is going to check this against. For everything that you write here, everything that you say here has to be attached, has to be backup. Your statements need to be attached. Credit card, for example, credit cards. I'm gonna say credit card, and the credit limit is, let's say that is 15,000. The balance that you owe is 10,000. Minimum monthly payment, this is how much you pay in a monthly basis. They say that you pay $570 on a monthly basis. This means that, you see that, okay, this is compromised for your payments. The business information, this is only if you have business. This is not the case. Employment information, this you need to fill in the employment, the information of your employer. This is, I'm gonna just say that this is employer, name and address. This is 147 Street, Miami, Florida, 33133. You're paying bi-weekly. Gross pay period. Gross pay period, if the net amount that we said, no, we didn't say that here. Okay, so if the net amount, they're asking us gross pay period. This is the gross. This is how much you make. This is your pay statement, a pay stub from your payroll. How much you make in biweekly. So I'm gonna say you biweekly 2,500. This is biweekly. It could be less. This is the gross pay period. Biweekly. Remember that if you say biweekly and you put 2,500, it means that you make $5,000 a month. Taxes paid period. Taxes paid per period. This is on the pay stub how much it's withheld. How much is withheld from your paycheck. So I'm gonna say here is 450 and state 0, local nothing. This is just federal. How long for career employee? 5 years. Non-wage household income. There is no wage income. This is if you have any other income like alimony, child support, rental income, interest and dividends, or Social Security, any other income. Food personal care. This is the standards that the IRS will require. This is the standard that we were talking before. So, for example, in food, I'm going to say that I make 250, one person 250 a month. 250. This is over the month. I'm going to say 300 a month. Housekeeping supplies, nothing. Clothing services. In a month, this is if you take your clothing to the dry cleaning, personal cloth care, and miscellaneous. This is I'm gonna say, for example, here personal care and services and miscellaneous. I'm not gonna use any of these numbers, just the basic food. Then transportation, gas. I'm gonna say 200 per month for gas. If there is public transportation, you can also use public transportation if that is the case. Housing and utilities, for example, housing and utilities. I cannot say rent because I own the house, so no rent. Electric and utilities. For electricity, 120. Telephone is cable is 50. Real estate taxes and insurance, if not including B, above. Let's say B. I go B. Is there any other information that we are missing in the house? Yeah, refinance amount. Yeah. Remember that when we pay mortgage, mortgage comes with interest and insurance. So in this 1,250 for the mortgage, the real estate is included the mortgage and the real estate tax and insurance. So if that is the case, then the real estate is nothing. And then health insurance, if I pay insurance by myself, that will be the maximum amount I pay if I am in the Obamacare or in the market, the health market. This will be $150. And out of care expenses, I say 50. And any other, I'm gonna leave this in blank because it's just not the case. Okay, so once I have this information, I need to go to the standards, to the to the IRS allowed. So the IRS allowed for food, for example, this is for national standards. I click here. Remember that I am in the form and I click here in the national standards. It is next to personal care. There is a bottom here, a button that says national standards. And in this national standards, it will bring to here. So my national standard for food for one person is 385. So I will put that number, 385. So I am below the limit. Electric, then I have to go to the electricity. This is for food. Now I go to the electricity. Healthcare expenses, housing and utilities standard. Okay, so I have to look for Florida. This case is Florida, and then depending of the county. So is Miami-Dade. Miami-Dade County is 1,757. This I have to copy. This is utilities for a family of 1. Miami-Dade 1,750, but this is maximum monthly allowance. Public housing and utility for a family of 1. Okay. So I have to go to the form and okay, how much it is? 1,000 Miami. 1757. Excuse me. So here is 1757. So I am below. No, I'm sorry. No, this is not the case. This is utilities. 1757. 1757. This is the total amount for. This is the total amount for utilities. Okay, so now transportation. Transportation is 1 car. National is 521. So it's 521. I am below the IRS allowed. Finally, health insurance and out-of-pocket expenses. So health insurance, out-of-pocket and healthcare expenses. So out-of-pocket care is 56. So I think that I am below the limit. 56 and 150. Let's see how much it is for out-of-pocket healthcare expenses. Healthcare expenses. There is no for health. It's only out-of-pocket healthcare expenses. This is all the information that I need to fill in for, and I need my signature and the date. Now let's review in this form. If I make $2,500 a month, 25 bi-weekly will be $5,000 a month, and this is my structure of expenses. It means that this will not be approved because I am doing only 300 plus 200 plus 173, 500, 670, 870, $900 in a month. and I am making $2,500 bi-weekly, meaning that I will have more than enough to pay the minimum amount, more than that. So this is why the IRS, and even the IRS will suggest, get a line of credit to pay your debt. This is why trying to, or saying something that is not real, that's not true, to the IRS is difficult if you want to pay less than the minimum amount that the IRS requires in a form. The minimum amount in following Form 9465 FS is the amount of the debt over $25,000 divided into 72 months. That is the minimum amount that you have to pay. Remember, you will accrue interest and penalties. But if you want to pay less and you know that you have enough money to pay, the IRS will require Form 433F, and in that form you have to attach backups to every single line that you filled in to prove to the IRS that you cannot pay. As we see in this example, this is not going to be acceptable. The IRS better just to pay the minimum amount. Don't get into trouble with sending other forms just to try to take advantage of the forms, just to do the payments that the IRS requires. This is our series of webinars, how to resolve your IRS tax debt. This particular webinar is Installment Agreement. My name is Fulton Abraham Sanchez. I'm a CPA. Our firm, FAS CPA and Consultant, is very interested in helping you to fix your IRS tax debt problems. You can follow us in our YouTube channel. We have testimonials regarding the successful applications of IRS reduction tax programs, and also you can send us an email, support@fascpaconsultants.com, and we will be glad in replying and answering your questions. Our website, FAS CPA Consultants, is also a good source of information to fix your IRS debt problems. It has been a pleasure.